Hey guys, Young here. So today I'm going to share with you guys part 2 of stocks that you can potentially look at. And today you can see I have so many stocks in place for you guys already down here. I'm so excited to share with you guys. But before we do anything further, before we continue further, if you do enjoy whatever I've actually shared with you guys, please do remember to subscribe to my channel and maybe like it or share it with your friends and family members so they can all learn more together. Alright? So let's head on to first and foremost the market headlines, right? Stocks actually rallied 300 to 400 over points today in the 14th, actually it's the 13th of August, but because it's after midnight already, so it's considered 14th of August. So it actually rallied around 400 points today. You can actually see Dow Jones Index here. You actually see a huge green candlestick bar, and just nice, it coincides with this support line. Now, some of you guys may not be able to see support line, but I have to say that support line and resistance line not 100% accurate. That you can't transpose a support or resistance line over. You can more or less like kind of estimate this is a potential resistance line here, a potential support line, potential resistance line here, resistance over here 2 times, 1 time, 2 time, 3 time, and then right now it becomes a support. Why? Because if you look at the daily chart, this is the daily chart by the way, you see that there's actually a 2 weeks over here. 2 weeks actually just nice at its support line, followed by today there's actually a momentum upwards. So just nice is actually just at its support line, but we can't really tell whether the market is really going to go up next couple of days until we have a few more confirmation candlesticks over here. Alright, so first and foremost, I share some stocks that actually thought as an opportunity for you guys. So you can take a look at Caterpillar. Caterpillar is a stock I've been actually trying to advocate since a very long time ago, but it has been always been punished because of the trade war. So you've seen that the last earnings, Caterpillar actually announced that they're gonna increase their full year guidance and everything. So by right, Caterpillar actually rallied all the way up. But after a week shortly, because of all the tension in the trade war and everything, so Caterpillar came all the way down. And this earnings call on the 22nd of July, they actually kind of tell the investors, tell the analysts that look, right, we are not able to maybe foresee the near future, but we are able to tell you guys that in the long run, we actually they kept their full year guidance. Alright, so Caterpillar has been a stock that's hit by the trade war, also hit by the wet weathers in the floodings in USA. So it's a lot of getting hit left, right, center, everywhere. But what happened is that we see that right now it's actually kind of at a support line over here. So you can actually look to maybe make a small entry, or you can even wait even further down towards $110 and make an entry over there. Alright, so up next we have United Rentals. United Rentals is URI. United Rentals is actually kind of like a competitor to Caterpillar. United Rentals is more focusing on the rental side, compared to Caterpillar is focusing more on the industrial side, where creating this kind of machineries for mining, for all this kind of oil rigging, etc., etc. So construction basically. If you go past any construction site, you'll basically see Caterpillar's machineries over there. So we see United Rentals kind of has been trading since on this kind of pattern since December, November, around this timing. So you can see right now, so at its support line over here, we can potentially look to create a smaller entry position and maybe exit around here, considering that the US trade war is going to be postponed all the way to 15 December 2019. So I do see some upside in United Rental and going back all the way up to maybe $135 or so. If everything goes well as planned, and do take note that United Rental also suffer the fact that the wet weathers in US itself. Alright, and also China trade war. So next we have AMTD. AMTD has been selling off huge ever since this period over here. But what really triggered all of this selling in the past few months was because of the trade war. First and foremost, the trade war. So when the trade war, investors see a recession coming, higher chances they will actually dump the financials first before dumping the other equities. Now we're starting to see that technology also getting dumped very quickly. So financial is always the first one to get hit. AMTD is a TD Ameritrade, by the way. They actually have a bank. It's actually a bank. So in that sense, financial is part of financial. That's why it's getting dumped. Also, another thing is that the lowering of interest rate will actually result in AMTD, TD Ameritrade to actually have make lesser money in terms of lending to customers. So as such, you see that AMTD has been dropping like crazy all the way, and if the reason why last few days it dropped like crazy all the way is also partly because of, first and foremost, the trade war. Secondly is that if they're actually expecting a 50 basis point cut in the rates, in the interest rates, so it actually, it was 2 times the reason why you should sell AMTD. But looking at how the market outlook is right now, maybe you can look to have some small position in AMTD. I think it's a very, very good bank. Besides, we trade more when there's volatility. Traders trade more when there's volatility, and AMTD also have a hugely Ameritrade that's focused on trading itself. Alright, next we also have Bank of America. I think Bank of America has actually fallen off a lot since, not really a bit, but a lot since the start of the trade war, all this kind of stuff. And you see it's kind of at its support line. Can you see it? It's not 100% for sure, but it's kind of near its support line at $27. Maybe you can look to have a small little position in Bank of America. I think it's a pretty awesome stock. Warren Buffett owns it. They give out a good dividend yield of maybe 1 or 2%, maybe a 3%, not too sure. But actually it's a pretty good stock that you can look to enter. Alright, next we have, oh no, it's starting to be like this. Please don't do this to me while I'm in the middle of a presentation. Alright, so anyway, let me just go refresh all this very, very quickly. AMD, refresh, 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 refresh. Alright, so oh no, all is Bank of America. Alright, it's okay. So I'll just probably gonna go through it quickly. Let me just continue this over here. No thanks. Alright, after which we have Square. I think Square is actually a pretty good stock that actually look at. Square has actually fallen off a lot since the earnings call, and one of the main reasons why it's actually fallen off so much is because of the they actually sold away one of their business unit, which is actually a F&B unit. So it's actually very, very funny how the stock is being punished because Square is a mobile solutions company and is getting punished like crazy. Alright, so another stock you can look at is Align Technology, ALGN. ALGN actually crashed a lot since the previous earnings call. If you look at the earnings call, it's actually 100% a full perfect earnings transcript that you actually want to see. They perform really well, except for the fact that they actually underperformed in the China sector, and now you can see that it's actually postponed to 15th of December. So probably you'll see some rebound in near term, but maybe not too much. So in terms of Align Technology, it's actually a very expensive stock at $182, and it's actually not undervalued in the PE to PEG perspective. So I do see some upside swing. You can actually look at Align Technology for the next few weeks or so. Alright, so after which let me see what the companies that we have. We have Siri. Siri is actually a company actually kind of like owned by Warren Buffett. He actually have a small stake in Siri also. So over the years, over the past few weeks, I actually attended a conference by some of the greatest marketers in the company, in the world, in Singapore itself, and actually highlighted that you see that how people are getting past all of this. Okay, let's take Game of Thrones for example. People like to hear the audio of Game of Thrones. Some people prefer to hear the audio of Game of Thrones as compared to watching the visual, the drama itself, because the audio gives more kind of emotions, and people actually don't have to focus so much on two things. The TV itself, you can focus on the audio at the same time, do other things at the same time, maybe board the train, listen to it, everything is good. So audio is actually becoming one of the more major part of our lives, and that's why Apple Music is coming out. Amazon is coming out their own one, and then there's a lot. Tencent Music also another company that actually outperformed today. They just beat earnings and everything was great, but stocks kind of did come down a little bit. Alright, so JD is also another one that actually beat earning today, rallied all the way up. A few days ago I actually posted on one of the groups that I say that there's unusual options activity in JD.com. Is looking people are buying thousands of calls on JD just before its earnings. Probably somebody has some inside news about this huge beat. They actually crushed earnings, right? I can't really show it here, but they actually beat earnings by 0.25 cents, and they beat on revenue, so everything is great on JD.com. Do take note that it's actually approaching a potential resistance line at $32. So if you're looking to enter a position in JD.com, perhaps you can hold it off for a while. Maybe see if it actually holds this, actually can break past this $32 first. Alright, then next we have AMD. AMD is actually a stock that beats earnings. Not really beat earnings, I think they didn't really beat earnings, but actually came all the way down since earnings. And it was actually a huge opportunity to buy it. But I was actually waiting for a chance. If trade deal does not go through, trade war does not go through as well on the 1st of September, then this AMD and the chip stocks, or the chip sector, will most likely come down further. But what happened is, after which Google actually announced using AMD as one of their cloud operating factory or warehouse or something like that. So AMD actually rallied off this news, and after which I didn't actually find an opportunity to buy into AMD anymore. As you can see right here, it's all the way at this resistance line. It's kind of a risky position if you want to enter into AMD, considering how high it has been. So if the stock does pull back again, go ahead and get into it. Alright, so we also have Disney also. Disney actually reported earnings. It was actually kind of a disappointing earnings. Didn't do as well as we thought they would, considering their smash, the blockbuster smash in terms of Avengers, Lion King, Aladdin, etc. They actually, and plus the launch of the Disney Plus, which is combination of Disney Plus, Hulu, and ESPN. So all these are great hype, right? But the thing is that a few months ago, I was actually sharing with some of the students in all my students, be it whatever community you're in, I was sharing with everyone. I was like screaming, that's not really a time to buy the Disney yet, considering it went up so high. The reason being is because that yes, Disney is coming out with Disney Plus, competing with maybe HBO, or competing with like Apple TV and Amazon TV, etc. But the thing is that, competing with Netflix especially, but the thing is that they did state in one of the earnings call, or did state somewhere, that Disney Plus is going to only be break even for the next 5 years. Let me repeat it. Disney Plus will only break even after 5 years of operation, right? So it goes to show that Disney Plus is a loss-making center, a cost center in the business term. It's called a cost center to the whole of Disney itself. And right now, with the combination of all of these three platforms into one Disney Plus, and it's actually suggested that it's going to take over 350 million subscribers around the world, and then they must subscribe for the next 5 years for this platform to be break even, right? And if they do succeed in it, wow, stock is going to rally like crazy. But if they don't, it's going to be a cost factor, and it's going to bring Disney shares down, and that's where you can look to actually enter into Disney again. Alright, so this is Disney. Let's see what other stocks we have. Shopify did a fantastic earnings. As you can see over here, after its earnings, it continued to rally higher and higher and higher. So this Shopify is actually a stock, if you own it since last year, you could have actually made 100% return on it. Other stocks include like Kronos Group. Kronos Group, if you're actually into the cannabis sector, you will look to enter into this. Kronos Group actually announced a very surprisingly good earnings, but what happened was that it opened very, very high, and then it came crashing all the way down. Now this could be due to a lot of reasons, due to the legalization of it, due to trade war, due to interest rate, everything. Alright, so there's a lot of reasons why it's coming down, but Kronos is a cannabis sector, and it still remains as one of the very risky asset class, because of the legalization of cannabis it might not even happen. Alright, so these are some stocks. I hope you guys learned something from it. Once again, I'm Yong here. If you guys do learn something, do find something, a stock of value, please go ahead and share with your friends and family member. The full disclaimer is that this is just for educational purpose only. I'm only pointing out to you guys what are some stocks I see coming down along the way as the earnings go by, as the trade war goes by. Alright, so once again, do remember to subscribe to my channel. Alright, so I'll see you next time. Bye bye.